The Fed just cut rates again. Where can you still get 6% or more right now? Hello, members, super savers, and bond course fans. I hope you're healthy and well. The Fed just lowered rates again at its December FOMC meeting by another 25 basis points to a target rate of between 4.25% and 4.5%. This rate cut was already widely anticipated and basically priced into short-term T-bills, as we covered in our most recent weekly update. So short-term T-bill rates didn't move much on the news. However, it was a different story on the long end again, where the yield for everything 1 year and longer went up between 5 and 14 basis points on the day of the Fed announcement, as the market digested Fed Chair Powell's message of stronger than expected economic growth and stickier than expected inflation, and as a consequence, fewer anticipated rate cuts for 2025. That same day, the new issue 20-year T-bond auctioned off at an interest rate of 4.625% and a high yield of 4.686%, the highest since April of this year. So congratulations to all of you who purchased at that auction. For those of you who have the risk appetite to move beyond treasuries for a bit of an even higher yield, in today's video, our last one for this year, I'm going to share with you the top new issue corporate and agency bond offerings at the time of this taping from Fidelity's platform, with the top ones yielding 6% or more. As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. As our Diamond NestEgg regulars have heard me say often in our weekly bond updates, most of the new issue agency and corporate bond offerings that are available at the moment do show attractive rates, but are callable, like this agency bond here, from Federal Home Loan Banks with a coupon of 6.125% and a maturity date of 2054, so about 30 years from now. If we click here, though, we can see that the first call date is in March 2025, so about 3 months from the time of this taping, meaning that it's a nice coupon, but we run the risk that the bond will be called relatively soon. In the worst case scenario, if this bond is called on the first possible date in March 2025, we would only get this 6.125% coupon for 3 months. In the best case scenario, if this bond never gets called and we hold it to maturity, we would get this 6.125% coupon for the next 30 years. Here's the CUSIP just in case anyone is interested. As a point of reference at the time of this taping, here's the yield on a 3-month treasury, and here's the yield on a 30-year treasury. In case this one is no longer available, though, here's the CUSIP for another new issue from Federal Home Loan Banks with a slightly lower coupon of 6%, a shorter maturity date of 2044, so about 20 years from now, and also a first call date in March 2025. Now, if you're someone who wants to stick with agencies and they're relatively low risk, but you're looking for something with a first call date that's a bit further out, we'll need to move down the list a bit to this Federal Home Loan Banks one here. So again, same issuer. The coupon is a bit lower at 5.375%, and the maturity date is in 2044, like the previous one. But the first call date is only in December 2027, about 3 years from now. Again, here's the CUSIP for those of you who may be interested. And if you want to lock in current rates for even longer, this other Federal Home Loan Banks agency bond has an even lower coupon of 5.240% and a slightly longer maturity date than the previous one in 2049. But when we click here, we can see that the first call date is actually in December 2029, about 5 years from now. Again, here's the CUSIP for those of you who may be interested. Remember, my general recommendation is that you should only buy callable bonds if 1. You're okay with them being called anytime after the first call date and are not overly concerned about reinvestment risk if and or when that happens. And 2, if you're also okay with them never being called and that you may have to hold to maturity. If you check both of these boxes, and yes, they're somewhat contradictory, but if you can live with a callable bond being either called early or not at all, then callable bonds may be something to consider because of the extra yield premium they typically pay. So I'm curious as always, which one of these agency bonds would you choose? This one here, and here with the highest coupons but first call dates in 3 months. This one here with a slightly lower coupon but a first call date in 3 years. Or this one here with the lowest coupon of all of them, but a first call date the furthest out in 5 years. Drop a comment below and let me and the community know. At the time of this taping, all of these new issue agency bonds are still available for purchase on Fidelity's platform. But as I've mentioned before, do keep in mind that the higher the yield and the further out the call date, the quicker these bonds are often sold out. Let's move on now to corporate bonds. This one here from Jefferies Financial Group has the highest coupon at 6% and a maturity date in 2039, so about 15 years from now. The first call date is in December 2026, about 2 years from now. Here's the CUSIP for this one. If you're looking for something with a bit of a better credit rating, this one here from JP Morgan also has a coupon of 6%, but a much longer maturity date in 2054, 30 years from now. The first call date is the same as the Jefferies one, though, in December 2026. Here's the CUSIP for this one. And as always, assuming that you are okay with a specific issuer, their credit rating, and the first call date, there are a few other things you should take note of, such as the minimum and maximum purchase quantities, whether a bond is convertible, which applies mostly to corporate bonds based on what we've seen, as well as whether there are any additional fees that your broker may charge. Most of the leading brokerage platforms such as Fidelity, Schwab, and Vanguard do not charge any fees for buying new issue agency and corporate bonds online. But it's always good to check on the fee section for certainty before you click that buy button, especially if you're with a smaller broker. If you want some guidance on how to navigate the agency and corporate bond search on Fidelity, Schwab, and Vanguard, I've linked all these videos in the first pinned comment below for reference. Please also note that some of the new issues that we've shared with you today from Fidelity's platform may not be available with your broker. So, as I've mentioned in our past several weekly updates, we already have some exciting videos and plans that we will be sharing with you in the new year. As our channel has grown, we have gotten feedback on a wider range of topics that some of you want covered here. So, for those of you who may be interested, I've linked this Google form below again for you to give us even more detailed feedback on what you want us to focus on in 2025. The survey is completely anonymous, unless you personally wish to provide your email for us to follow up. While I cannot promise that we will be able to implement every suggestion you give us, do know that we will do our best to incorporate the ideas and suggestions. And I thank everyone in advance who will be completing the survey and contributing to all that we will do here at Diamond NestEgg in 2025 and beyond for you. And of course, if you've already completed the survey, there's no need to do this again. All right, members, super savers, and Bond Course fans, I hope you enjoyed this video and learned something new. And as always, if you want to really get up to speed on bond investing and building out your bond portfolio while rates are still quite attractive, then check out this video here on our 2024 bond courses. Or come join our next live member Q&A happening today, December 19th at 5 p.m. Eastern Time, 2 p.m. Pacific Time, where we'll be diving deeper into this month's 2, 5, and 7-year T-note auctions and all things fixed income. I've linked all the details on our bond courses and YouTube Super Saver membership below this video for your convenience. Good luck to everyone who's planning on picking up some bonds in the coming days, and see you again very soon in the new year with more brand new wealth building content for your financial journey.